Hello, it's Jimmy. Today I want to talk about how fear about drops in the market have affected me and how I invest. I knew back when I started investing, I think in 2002, that the market went up and down. Most of the time it went up, but when it went down, that's when people would make a little bit of noise about it. I'd say intellectually I knew that there would be drops in the market, but I hadn't really experienced it fully for myself. I mean, I did live through the 1987 crash. I'm that old. I did not live through the 29 crash. I'm not quite that old. However, it wasn't until I was putting my own money into the market and investing it that I actually got to feel it for myself. And it didn't take very long because in 2008, some weird stuff happened. Now, there's a lot of information out there on what precipitated the 2008 global financial crisis. I'm not going to get into that here. It is interesting. I have some books on it and find it kind of fascinating, especially because that was the year I bought my house. So real estate was running around with its hair on fire. But for me personally, I got to watch my 401k balance go from about $12,000 to just under $7,000 in a matter of months. And at the time, losing thousands of dollars like that was a little hard to wrap my emotions around, we'll say. Again, intellectually, I knew these kind of things would happen, but wasn't really ready for the punch to the gut. One of the important things that I learned when that happened was that I wasn't actually losing money. I was losing value in the funds that I was invested in, but I didn't sell any, so I didn't really lose any money. However, it still wasn't that comforting because watching the news made things seem a little strange. There were plenty of people around me that were selling off and getting out of investing altogether, pulling their money out of the stock market. I did not take that route. I didn't know at the time if that was a smart move or not. Well, I knew that I wasn't going to sell off my investments out of my 401k and just hold on to the cash. But instead of just leaving it alone, I actually kept contributing the same amount that I had been. At the time, I had a company match and well, it's free money anyway, so I might as well keep going and, what's half the value of my 401k down the drain anyway? Well, the cloud passed and the market recovered, and those contributions that I put in helped grow that 401k balance tremendously because even though people were jumping out of the market, that made the price of the shares drop dramatically. So I was able to scoop up more shares at a lower cost than everyone else. So that actually worked out very nicely. So through that, I learned to keep an eye on the markets, but not to let fear dictate my decisions. I still had a plan that I wanted to keep contributing, and I stuck with it. Monitoring the conditions, of course, but making sure that my emotional side was kept in check. Now, obviously, if things had gotten really bad, I would have had to readjust, but just kind of watching the behavior of people around me, I thought I'm going to just stay my course. Well, that was a very good exercise to go through in 2008 and 2009, because then we had something similar happen in 2020. So I already had a template for what to expect, and I knew what my emotional side would be driving towards during the financial turmoil, and I kind of made a similar plan to just keep forging ahead. Well, back in March of 2020, I saw that the markets were really taking a dive and people were going bananas over all sorts of things. Unlike what I did in 2008 and 2009 and just investing my normal amount, I took a bunch of the cash that I had sitting on the sidelines for some other things that I really couldn't do during that time and just put it all into the market. Well, it just so happened that the biggest lot of shares that I bought was 2 days before the market hit its bottom. So I did all right on that. However, at the time, I didn't know if that was the dumbest thing I had ever done or one of the most genius things. Now, I can't really take credit for the genius part of it. I think got lucky with the timing of it. But again, it was still part of my plan to continue investing during that downturn. Well, that old 401k, I have since left that company many, many years ago, and I rolled that into an IRA. Haven't contributed to it since, geez, probably before 2010. I imagine that would have been the last contribution in there. And so that thing is just sitting there and compounding and growing and doing all right. Same with the money that I invested in 2020. Now, I did put some larger chunks in than what I normally do with my regular investing, but I'd say that did quite well. It worked out well for me. So I do pay attention to the markets. I'm not watching the news so much about markets and investing anymore. I mean, I go out about once a month and I update my balance sheet and my assets, and I look at it and I just say, okay, well, this is where we're at, but I don't get too emotionally wrapped up in it. Now, it is nice when it's been a good month and the investments do well to see a nice positive number, but we have had a few months where it goes into the red as far as the drops, and it's like, I don't know about this. This is not the direction I want to keep going, but staying the course has worked well for me, and just keep plowing ahead, and that's worked out all right. So I guess my investment philosophy is the same as my life philosophy. Don't get too emotional and don't pull out too early. As always, thanks for watching, and I hope you're having a great day. Every time we've had like a freaking rodeo around here.